Yo, so today we are going to be discussing counter trend trading techniques and how you can learn how to counter trade and how you can use that to your advantage when you are trading the markets. So, without saying much more, let's get into it. Okay, guys. So, first of all, when it comes to counter trend trading, you need to understand that counter trend trading is basically you going against the market's dominant direction. So, for instance, if you come into the charts and the market is pointing towards the downside on your higher time frame, you're basically looking to take minor movements back to the upside. You understand, however, in the back of your mind that the overall trend is towards the downside. So you're not just there trying to take a trade in a downtrend to buy it forever. You know what I mean? You're just trying to take advantage of certain amount of pips out of the markets. Um, Based on whatever trend is currently trading in. So, for example, if you're going towards the downside, you are only looking to take maybe look if it's creating a newer low, you are trying to trade the lower high. And then you know that the market obviously trends, so it creates lower lows, lower highs, if it's another down market. So when the market creates a newer low, you come into your charts and you see the market has created a new low. You're trying to identify that new low, find the bottom, and then take a trade in anticipation of a lower high, which is usually going to be where you take profit is. So we're just going to illustrate it first. If you are listen to the video, I'm hoping that you are taking notes, so that you, after this video you can obviously go over it, and then you can always like listen to the video as well as soon as you are done. So we are gonna discuss that. Let's get into it. So illustration vibes is gonna be like this. Just for example, the market is trending towards the downside, so it's creating lower low, lower high, lower low, lower high, lower low. So you come into your markets and the market has just created a new lower low. What you want to identify is that first of all the trend. So when you come into your charts, you're using your high time frame. You want to identify the trend. You will see that the market is over a movement pointing towards the downside. That's the first thing that you want to do. Once you've identified the trend that you're currently sitting in, what you want to then identify is, you want to see where the market is currently at. Is it creating a new low or is it currently creating a lower high? Okay. In this situation, the market has just created a new lower low because this low is lower than the previous low that was created here. So this is the new low. Now, once you have identified the new low, you don't just want to jump into the markets in anticipation of a pullback to the most recent lower low that was broken. You don't want to do that. You want to now identify an area in the market where the market, once it is created as low, you want to identify and isolate the area where the market starts to range. So in this situation, you then wait for the market to first rally down, create a new low. Once that new low has been created, you want to identify an area in the market where there's a lot of weak rejections. Okay, so that's going to be a signal that's going to give you an indication that, hey, look, sellers are starting to step out of markets, potentially buyers can be stepping back in, and that is just a signal that tells you that, hey, sellers are starting to exhaust out because it's weak rejections. It means that price is rejecting certain levels. Okay, um, we do not know exactly why. It's not like I'm setting out here and I've got the menu of, this is how it's supposed to be and this is what's happened in the firms. But what we do know and understand is that once the market creates a new low, it usually will create a lower high before it continues towards the downside. So as a counter trend trader, you are looking for this to give you the potential low. So you're trying to anticipate the low. And once you anticipate this low, you see the low, you are anticipating the market to return back to the most recent lower low that was created. And then there's obviously going to be a take profit because in the trending market, once a market creates a lower low, creates a lower high in anticipation of a continuation. So if you're still in the market, once the market returns here, you kind of just, you're gambling for some reason on some sort of luck that the market's going to continue going all the way back to the upside. That is just, I don't know, man. That's just being naive. Um, but you want to see the market return back to this level, and then this is usually going to be a take profit level where you exit the market because the market is trending towards the downside. You have to respect the trend, and so the market can continue going back to the downside, creating a lower low. Okay, and again, guys, um, with this type of technique, you want to make sure that you understand. That's very, very important. I hope that you highlight this if you are taking notes. It's very, very important. I mean, it's critical for you to understand that first of all, you need to identify the trend. because you cannot counter trend trade. The reason why it's called counter trend trade is because you are going against the overall bias of the market. It's counter trend trading. You're going against the bias. So if the bias is bearish, which is what we're seeing here in this illustration, you are looking to go against this overall movement, okay? But you also need to understand that when you do go against the overall movement, you need to understand that you need to have a strict area at which you are exiting, which usually would be the most recent lower low that was broken, and then obviously in anticipation of a continuation back to the downside, okay? So let's example with a downtrend. We're gonna make an example using an uptrend. So let's just say the market, you come into your charts in your big time frames, the market's trend was upside, creating lower, higher high, higher low, higher high, higher low, higher high. Excuse my voice, man. I don't know. Um I don't know what happened, man, but I just woke up and my throat is a bit sore and stuff like that. But anyways, we kapan. Um, so you come into your charts, and the first thing you want to do is you want to identify the trend, which is basically going towards the upside. Why? Because the overall movement is towards the upside. Doesn't mean that the market may not create minor small pullbacks like these here, like these small down movements. It may, but in the overall movement is towards the upside. So we can identify the trend. The trend is towards the upside. And how do you know the trend is upside? It creates higher highs and higher lows, higher highs and higher lows. Guys, the market cannot just go up forever. It can't. I'm not saying that guys, you have to understand this. It has to move in waves. These waves do not have to be exactly like I'm showing you now, like 100% like this and whatever the case may be. But trust me, the market does just not move all the way to the upside, or else you wouldn't be seeing all these funny things in your charts, okay? All these small movements up now, you wouldn't be seeing it. So the market has to be moving in phases, in waves, okay? Creating lower lows and lower highs, and etc. and etc. So now, if you are in the uptrend, you want to identify again the trend which is up, and then you want to identify what phase we are currently in. In this situation, again, we are creating a higher high. And in an uptrend, when markets are creating a higher high, what is the anticipation? Is that the market is going to create a, a higher low before it can continue going to the upside. Because that's just how an uptrend goes, right? So once it creates a higher high, you're anticipating for the market to create a higher low, okay? In anticipation of a continuation. So as a counter trend trader, you are looking to take advantage of these small movements to the downside. Okay. These minor movements is what you are looking for. These little movements over here. Okay. Um and over here as well. These small movements over here is what you are looking at, okay? So you are not looking at the major move, you're only looking for these small minor movement that happen in the market. But you can't do it without first identifying what the current trend is. You have to first identify this current trend so that you can then identify where the minor movement could go to. How do you know where it could potentially go to? Potentially go to as when it's creating high highs and then high lows, high highs and high lows. Okay, higher high because this is a new high, higher low when it creates a small movement back to the downside. This is what we call it higher low. And when it goes back higher, this is called another higher high because this high is higher than this previous high. So we call this a higher high. Okay, cool. Hope you took note of that. So that's how you create that. Now, the tip that I want to actually highlight in this video is that if you are counter trend trading, I have said this before in this video already, you want to make sure you identify the trend first of all. Second thing that you want to do is you have to identify the phase of the market. Is it currently pushing towards the upside, okay, or is it pushing towards the most recent structure that's broken? So in other words, is the market pushing like it's currently pushing over here, or is it actually already has created? If it has already created a higher low, then you technically cannot counter trend traders, because then the move is already over, right? Remember, you are looking to take the movement back to this level here. Okay. So if this has already happened, then technically speaking, your trade is over. You have to wait for this to be created again to give you bullish sentiment, and then you can then start anticipating this to happen again. Okay, so you want to know, like, is the market currently like this pushing up, or has it already come back to this level? Okay, because if it has already come back to this level, then that means you have to wait again, okay, for the market to push higher and then come back again. Okay, hopefully that makes sense. Um, so yeah, that's basically that. But we're gonna go through some live examples as well, just so that you guys can see. I didn't prepare any example, but I'm sure I'll be able to find one. Um, so yeah, there is one already. So let's just look at this, right? Imagine your market is looking like this. You come into your charts. This is the 4 hourly chart. You see your market is looking like this, and you currently can see this whole leg here is pushing towards the upside, right? So it's creating higher highs and higher lows and higher highs and higher lows. And I'm gonna highlight that out with my indicator arrow. So there we go, creating a high, a high low, a newer high. There is a high low, anticipation of a continuation back higher. So not only am I illustrating it from illustration perspective, but you can see this in the actual market. This is what happens, guys, on a daily basis. And doesn't not happen on just specific time frames. It happens across each and every single time frames, guys. Okay. You see a higher high and higher lows and lower highs. It happened across all markets, across, well, I'm personally trades with currencies. So from my experience, I've never seen a market not trend, even if it's on a 1 minute chart. Okay. So that's that, guys. You identify the trend, higher high, higher low. So let's just say that the market is currently on this phase over here. Okay, so you come into your charts and this is what you are seeing. Okay, you're seeing that the market has moved towards the upside. Okay, created a high, low, and it's currently here. What is your anticipation as a counter trend trader? Is that somewhere, somehow, you are going to get rejection candles where the market starts running out of steam. Buyers are going to step out of the market, and that is going to create a push exhaust, which is what you are looking for before it can continue going even higher. Why? Because the overall movement is pushing towards the upside. Hopefully that makes sense. Okay, so what you're looking for is for weak rejections to give you these signals of the market rejecting high prices, and then from there onwards, you're looking to anticipate a retest, which means just a pullback, as you will call it, the counter trend trading, and then you look to exit at the potential recent low, high low that was created, higher high that was created or broken. That's where you're obviously looking to take profits in the uptrend. So let's see what happens, guys. You can see the market moves, okay, towards the side, and then you can see a whole lot of weak rejections. These weak rejections just give you signal that buyers who push this market all the way to the upside are starting to stall out. They're running out of steam, and somewhere, somehow, we need some, you know, we need some sellers to step back into the market, or just a signal that sellers could be looking to step into the market, okay, because we're seeing a lot of weak rejections. Like over here, you can see these are big, massive candles that was being printed. Over here, a big, massive candle, big, massive candle, big. All of a sudden, we started to see smaller and smaller and smaller. That is just a sign that the market could be stalling out. Okay, so then basically you're gonna then use your whatever techniques that you use to take this trade. I personally have my own. We're not gonna discuss that in this video, but you're gonna use whatever techniques that you want to use or that you personally do use to take this trade. Okay, so you'll see that the market installs and then starts to fall back to the downside. And again, guys, once the market does this movement, bang bang, you need to understand that this is the level that you need to exit, because from this level the market could just shoot up. It could. This is not the holy grail of trading, guys. I'm not trying to, like, be here and tell you guys I have the holy grail menu of forex trading, and if you do this you are gonna make 1 million and drive a Ferrari and own 10 Rolexes. And I'm not trying to say that. I'm just saying that if the market does happen to make the small movement, just make sure that you exit, because the overall momentum was upside. You have to respect the overall momentum. Okay. So as you can see, you exit the market over there. It could continue falling lower. It doesn't even matter. You just need to understand when you come into this market, the first question is, where is the market currently pointing to? Which is currently up movement. Remember, before we had all this, we only had this. So if the market is current movement is moving towards the upside, you need to ask yourself, where could it potentially return to? Then mark your high low out, your your most recent high, and voila, you wait So that's just gonna be, you wait for the market to then start exhausting up here, giving you small weak candles and stuff like that, and then you can look to take trade back to the downside based on whatever signals that you use in order to take a trade. Okay, it's that simple, guys. This is not complicated. It's not rocket science. It's not, it's not all that. It's just basic market structure. This is how the market moves on a daily pace. You can go down to your 1 hourly chart. You are gonna see the exact same thing across all your charts. I mean, even 15. I mean, let's just do it right now. We go down to a 50-minute chart, guys. Check this out. You're gonna see the market is trending. Let me just erase all this. This is the 15-minute chart. You can see this, guys. What do you see? You see lower lows, lower high, lower low, lower high. Now, in between this, there's a small little movement. This is where us retail traders can get caught up. Me personally, I'm aware of this because the market trend can be showing there was a downside, but then it gets in and starts playing around. It could stay there for like 10 hours or even not 10 hours, I'm exaggerating, like it can stand there for quite some time. And then you can start doubting your trades, but the overall movement still remains towards the downside. So you need to understand that not only is it trend towards across all the markets, but you need to also understand that these overall movements, which you are going to see in your bigger time frame, remains foundation. You cannot deviate and start, um, you identify the trend on a higher time frame, then you go on a smaller time frame, you start looking for other things. Nah, bro, you're going to confuse yourself like that. You want to keep it plain and simple. This is trading. Um, so you want to keep it as simple as you possibly can. Identify a trend, identify the momentum of the candles, or wherever it's moving. Is it a phase, is it a push phase or exhaustion phase? Is it creating a higher high or higher low, or lower low or lower high? Identify that, and then if you look into counter trend trade, just make sure that you understand the trend and the current phase and the candles. That's all you need to understand, guys. So again, this is market is trending down. I mean, and that's 15-minute chart. We can go down even to a 1 minute chart. Okay. And what do we see here? Guys, same thing. Market that is moving towards the upside, creating higher highs and high lows. Okay? Higher highs, high lows, higher highs. So the market is forever trending, bruh. Like there is no way the market can never trend. Like, does it make sense? You can even go down towards the side. Look, it's just the market is always trending. We can go down to our daily chart, okay? The daily chart, and we're gonna see what happens to the daily. Okay, so the market is forever trending. You can see here as well. Look at that. This is an uptrend. This is a downtrend. Okay. Oh, excuse that. That is so bad. But this is a downtrend. Okay. And if I ask you, what do we current? Because this is the current market that we are in. Okay. So if I ask you right now, like, where's the market's overall movement pointing towards? I'm pretty sure you are going to be able to see that we are pushing towards the downside, right? If you say to the upside, bro, I don't know. But we are pushing towards the downside, guys. I'm sure you have eyes to see this. The overall movement with the downside. So as a counter trend trader, you're looking for some reason. You're just looking for reasons to buy this market back to the upside and then exit before it continue going lower. Simple as that. Okay. So guys, it's that simple. It's not that complicated. So practice your eyes. It really does require a lot of repetitions so that your eyes can become familiar with these things. And of course, if it's your first time trading, I would recommend that you start going into counter trend trading. Just because it's a bit more complicated, it's not as easy. It is simple though, but it's just not easy. So I'd pretty much recommend that someone that is just starting out, check out just normal trend trading, how to identify the trend that you're currently in, and etc. And just focus your attention on that first. Once you start progressing and learning and all those type of things, then later in the stage you can start looking to implementing counter trend trading and stuff like that because it's more but advanced. But yeah, guys, hope you enjoyed this video, man. If it's your first time to this channel, please make sure to hit that like button, man. Subscribe if you haven't. It really does help a lot with the algorithm. I'd really would appreciate that support. And yeah, leave a comment in the comment section if you've learned something. Again, if you're watching this video, I hope you're taking notes. It really does just help you with your learning. It boosts your learning. But yeah, until next time, guys.